Hello and welcome to this, the Books Crypto Club weekly catch-up on Zoom. It is Sunday, the 22nd of May, 2022, which is Bitcoin Pizza Day. This is the day that in 2010, two pizzas were purchased for 10,000 Bitcoin. And that was the first kind of commercial transaction where Bitcoin was used. So we've moved on a long way since then. Pizzas have kind of come down in price compared to that, or at least with Bitcoin now worth somewhat more, the price is different. Anyway, stick around. Let's see what we've got to share with you today. We talk about all sorts of things in these sessions. We may talk about blockchain, cryptocurrency, distributed ledger technology, DeFi, NFTs, ICOs, STOs, all sorts of letters really. Do remember to click on the subscribe, like the video, make comments, ask questions. Even better, come along to a future session. We hold these every Sunday at 7 p.m. UK BST, and they're open to everybody, novice and expert alike, and there is a link in the comments section below. Hope to see you at a future one. So let's see who's going to come and join us today. Elena, hey.
Hello, Gary. How are you?
Okay, a bit lonely today.
I didn't expect to see just you.
Yeah, I was surprised. I put the message out early on and I thought there'd be a few people along. The problem is that in the UK, the weather's really nice this evening. So I guess people are out watching that, or they're all looking at the Bitcoin prices and trying to figure out what's going on next. So, well, I thought I'd come along anyway and see who shows up.
The weather here in Ireland is also very good.
Okay.
However, I didn't want to miss today's Zoom meeting.
Is there anything in particular that you're keen to learn about or hear about or anything?
Well, it would be nice to hear it from you, what's happening to the Bitcoin prices.
Okay.
But yeah, also today I came prepared. I did some homework and I have a particular question already. Even
brilliant.
So in our Telegram channel, someone posted a link to a Wired article,
okay,
about NFTs privacy and security.
Mm-hmm.
This is NFTs are a privacy and security nightmare from April 2022.
Okay.
So I did find it very interesting, but there is a bit in it that I would like to hear your comment.
Yeah, well, go for it.
NFTs shatter the illusion of privacy entirely. And it goes, a key component to keeping crypto anonymous is to avoid tying transactions to any ID, which means NFTs can fundamentally undermine this goal. The idea behind NFTs is that they are fundamentally unique, identifiable tokens. And it's still technically true that no individual NFT can be duplicated. And this means that if a user ties an NFT to any part of their online or in real life identity, say by using an NFT as a profile picture on Twitter or maintaining a profile on an NFT marketplace, it becomes trivially easy to find out what else their wallet has been up to. This doesn't even require using a specific app or service. For example, when Jimmy Fallon showed off his Bored Ape on TV, that made it very easy to find Jimmy Fallon's wallet address and see what other transactions his wallet has been involved in. While knowing who bought which JPEG might not seem like a major deal, it becomes a critical issue as crypto advocates push the idea of using NFTs for home ownership, medical records, and social media. Mm-hmm. A wallet or even a network of wallets that are not adequately obfuscated could act as a giant bucket of personal data that not only can't be kept private, but cannot be deleted from the blockchain. What do we do about it? So I cannot buy an NFT and use it as my Twitter profile anymore, because this potentially will leak my identity to the crypto world. Yeah. Does that mean that I need a new crypto wallet now for every new transaction? a little bit messy.
So there's several things to comment on in there. So the first thing is the recognition of this whole thing of anonymity is false anyway. You have on Bitcoin, on Ethereum, on the major blockchain platforms, unless they're specifically designed to hide identities, most blockchains run on a pseudo anonymity. I was struggling to get the words out there.
So it's like anonymity, but it's not anonymity.
Correct. Okay, so let's explain what that means. If you look on a blockchain, you use a blockchain explorer. Have you ever actually looked at a blockchain explorer?
No, I haven't.
Okay, well we'll do that in a minute then. We'll take a look. What you'll find is that the Bitcoin blockchain, for example, one of the simpler examples, has a number of pieces of information. It has, a date and timestamp of when a transaction took place. It has what the wallet address was that sent the Bitcoin, what the wallet address was that received the Bitcoin, the unit of measure, which is Bitcoin, and the number of units. So if you sent 1 Bitcoin, it would say at this date and time, 1 Bitcoin was sent from wallet A to wallet B. Doesn't actually include price information generally, but it just says that unit of information, okay? Now, from that, if you actually look at it, it just gives the wallet addresses. So at that point, it's pretty anonymous. It's just a set of hex values. You can't work out who Elena is, who Gary is, or anything like that. So that's the anonymity piece. The reason it's pseudonymous is because if you said to me, Gary, can you please send me 1 Bitcoin? And you give me your wallet address, well, I now know that you own that wallet. Okay, so this is exactly what you're describing with the NFTs, that gives an ability for someone to say, well, someone with that NFT has got that wallet address, and so you can tie it in. And so what you could actually do is if I sent you 1 Bitcoin, so you now know my wallet address, you could go onto the Bitcoin blockchain and you could see every other transaction I've ever made with that wallet address. Okay, so this is why it's pseudo-anonymous now, because it's not truly anonymous. It can be tracked. And this is one of the things that law enforcement agencies publicly will say, Bitcoin crypto really bad, it's what criminals use, it's untraceable, it's dreadful, it's awful. In actual fact, they love it. And the reason they love it is because it's got this complete traceability piece that if they can do something, and they did this, I think it was in Sweden a while back, or Denmark, where a couple of policemen go undercover, they do a deal with a drug dealer to buy some drugs who wants paying in Bitcoin. They make the transaction in Bitcoin. They now know his wallet address. So they then actually caught him and prosecuted him and used the ledger, the Bitcoin wallet, the Bitcoin blockchain to show every other transaction. So this is why law enforcement people officially say Bitcoin's really bad. It's all anti-money laundering and drugs dealers and all this kind of thing. But in actual fact, it's exactly the opposite because it's so easily traceable. So that's the thing about pseudo-anonymity, and that's what a number of blockchains use. Now, if we extend that onto an NFT, as you say, it might be you've got a Bored Ape Yacht Club, chimp or whatever, which you've publicly announced what the wallet address is for it. So now people can now associate you with that thing. There's a really easy way around that, though. In fact, there's a couple of easy ways. One is quite often an NFT is part of a collection. So as an example, I've got an NFT produced by a Californian digital artist, and she did it as a limited release of, I think, 100 NFTs. Now, the thing is, it's the NFT that's unique, but the digital image is the common one. So the digital image is what you see, that's the artwork. Yeah. So if I put that digital artwork as my avatar, you don't know which NFT is associated with it. It could be any one of 100. You know, and this is the thing where if you are sensible, you won't use your NFT as your avatar. You'll use the image that the NFT points to as your avatar. And then there's no link to the NFT. Does that make sense?
Yes. So in the NFT, in the actual code of the NFT, there will be a URL link pointing to that image.
Correct.
And it's better to use the image as an avatar. Correct. Okay, not the NFT itself.
That's right. And that then makes the whole problem go away. Because if you think about, if you've got a JPEG, an image file or something, anyone could potentially make an NFT of that. Yes. The original artist certainly could, but someone else could do a copy, anything like that. If you use the JPEG as your avatar, there's no way of connecting that with a specific NFT. If, however, you do, and I've seen some people have done this, they do use their NFT as the connection to the JPEG image as their avatar. They basically broadcast to the world, here's an NFT that I own, here's the NFT identity number, and here's the wallet that's associated with it. So now, exactly as you say, everyone can see any other transaction that wallet's done. Or the other route, the other way of doing it is, as you said before, have a couple of wallets. In fact, most people have multiple wallets. And so what you can do is you can use a wallet to buy your NFTs and a wallet to trade in crypto, and you can keep them separate. And that way, again, you've kind of limited it. But the original premise of Bitcoin was that you would use a different wallet address for every transaction. And if you did that, then that would be even better, because that means, that wallet address is associated with only one transaction, and you're never going to use it again. It's like a burner phone in a way, but it's a burner wallet. And if you look at the Bitcoin specification, it actually suggests that rather than doing what most people do, which is they transact against the same wallet address, you actually transact against a new wallet address every time you do a transaction. So again, that solves the problem. But again, great questions, definitely on that. So now you know ways of keeping your NFT anonymous, which is don't use the NFT.
The best way to keep anonymous is not to use any services at all.
Well, if you want to be anonymous, then it depends just how anonymous you want to be, and it depends who you're trying to be anonymous from. But yeah, to avoid electronics is the ultimate one. That will keep you away from a lot of things, and then use electronics which are intended for anonymity. So if you're dealing in crypto, use something like Monero or Zcash or something. So there are degrees of it. It comes back to when people are talking about cybersecurity and protecting their crypto. It's what are you protecting it against? Most people lose crypto not through theft, but through stupidity. They forget their seed phrase, they lose their keys, they forget how to log in or whatever. A smaller number do have their crypto stolen, and a lot of crypto is stolen by things doing like phishing scams. So this is where you'll get an email to say, hello, it's Binance here. There's been a compromise on your account. Please click here to re-enter your details. And people go, oh, dear me, I better click on that. And they click on it, and it takes them to a site that looks like the Binance site, but it's fake. And but
they never bothered to check.
Exactly right, yeah. And now they've just given all of their credentials away. So there's that opportunist thing. Then there are, state-sponsored hackers who will do quite remarkable things. But for most of us, we're not going to get hacked by Mossad or CIA or whatever. So we probably don't need the level of security to protect us against that. So security is on a continuum of how secure you want to be. and against whom and for what reason. It does kind of vary. So for most people, you know, a cold wallet and a private key and a a seed phrase hidden away somewhere is enough.
That's all that's needed.
Exactly.
Yeah, and what about associating your name with your wallet address? What is it called? Something name service in cryptocurrency?
Yeah, there's a thing called ENS, which is Ethereum Name Services.
Ethereum Name Services. So I can register my name, Alena, as my wallet address, and I can ask everyone, could you please send your money to this address? So this makes it much more easier on the one hand, and this de-anonymizes me very much on the other hand. Is
correct?
Is that correct?
Exactly right. And this is the whole thing that everything has levels of security around it, and it depends what you're trying to protect from and what you're trying to do. So for some people, to use ENS, where it means you can have like a Gary Nuttall domain in effect as your wallet address, is really convenient, really great, not nice bit of promotion, but is a security risk because now you're publishing openly what your wallet details are. Now, if you still secure that wallet, that's okay, but you've gone down the one level of hiding a bit of your security. It's a bit like when people say, you know, I see this on forums all the time. You know, oh, you know, which crypto tokens are people invested in? Well, as soon as you tell the world that you've got, you know, Bitcoin, Ethereum, Dash, whatever, then straight away that means a hacker now knows that you've got those cryptos. So that makes it a little bit easier.
So he or she can filter the whole database according to this criteria.
Exactly. And this is why it amazes me on like Facebook groups and WhatsApp chats and all this kind of thing. People will say things like, you know, oh, well, I bought 1.5 BTC yesterday on Binance, you know, but the price I got was blah, blah, blah type thing. So straight away, they potentially got the ability for someone to see, well, how many trades were there of 1.5 BTC yesterday? Straight away, they've now got a wallet address of where that's linked to. So, you know, they're kind of opening themselves up. And it's bizarre because, you know, some people are quite open about how much their holdings are as well. And this is why I always say to people on these calls, like, these calls recorded, please, you know, try and avoid talking about how much Bitcoin you've got or how much whatever you've got, because it's a little bit like saying, hello, you know, I bank with Barclays Bank, my bank account details are here, and I've got £25,000 in the current account at the moment. You wouldn't post that on a Facebook forum, but why do people do that in crypto? And it's because they're showing off and they're naive and they don't know any better.
That's the community aspect of cryptocurrency.
Yeah.
NFTs.
Yeah. And it's lovely to have a community, but bear in mind that there are always bad people in any communities.
Yes. Yes.
So watch out. Let's see if we can pull up a blockchain explorer, and I'll show you what I meant by Bitcoin and how that works. So bear with me. So what you can do, and you can try this at home, or you can watch the recording, is if you go to, there is a website that I use quite a lot, which is called blockchain.com. And blockchain.com, great company, been going for a number of years, great reputation. If you look on the left-hand side, you'll see there is a thing here that says Bitcoin. And if we click on that, so it's showing all the prices, just like you would do on an exchange and that kind of thing. But if we go down a little bit further, you'll see that it talks about latest blocks. So I assume you know that with the Bitcoin blockchain, every 10 minutes, a new block is mined, okay? And a block is a set of records with transactions in them, which a Bitcoin miner has been given a reward for solving a complicated puzzle for. Okay.
And reward is the fees that the user pays for their transactions, is it?
No, not necessarily. The reward for a miner may include the fees that a user pays for a transaction, but it also includes what is called a Bitcoin mining fee. And Bitcoin mining fee was originally the fee that the miner gets for being first to solve the puzzle, so to actually mine the block. And it used to be 50 BTC. Then every 4 years it gets halved. So it went 50, 25, 12 and a half. Now it's 6.25 BTC. We'll see that in a minute.
Okay.
So we'll see there's a number of blocks here. And it talks about the height. The height is basically the history. So how many blocks have been mined. So if we go to 737457, this is the header information on it. It just gives the hash, which is what was calculated as part of the mining contest kind of thing. Well, further down, it has block transactions. Okay. And we'll see here, I don't know if you can see this, where it's got Coinbase, which is newly minted coins and an op return code. And then it's got over here 6.37. So it's actually 6.25 plus a little bit more that's come from somewhere else. So this is the mining fee reward that goes to the Bitcoin miner. And if you look at this, this is a full record. So we read it through for a minute, and it says that from this hash, from this address, this coin, it's actually a Coinbase address, so it doesn't really count for this. But basically, it's saying that to this address, 6.37 BTC is being sent. So this is the wallet address of the Bitcoin miner. And if we click on that, we will see any other transactions, in fact, all the other transactions that have ever been associated with that wallet.
Okay.
So there's loads and loads of them. Now, do you notice something about this, that it's not really broken out very clearly here, but you think about what you've got here is a from address. So that's the wallet of the miner, a to address, and an amount, and a unit measure, and a date and time stamp. So this is all the information that I said that a Bitcoin blockchain contains. So if we knew which miner had mined this block, we could then associate it with 2E6 blah, 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 blah type thing. So that's the pseudo anonymity piece. And that's all the Bitcoin blockchain holds.
The same goes for Ethereum and so on.
Yeah, so Ethereum works in a very similar way. So here over on the left, again, we've got the Ethereum Explorer. The presentation is slightly different, but the concept is the same, that you've got latest blocks. With Ethereum, a block gets mined every 2 minutes, not every 10 minutes. So that means Ethereum is, in theory, faster than Bitcoin. And this is where they're trying to improve performance and everything. But again, you know, we've got this number here, which is the block number. If you go into that block, there's some header information about how many records there are, when it was mined, all that kind of stuff. And then we've got, again, a from address, which is here, a to address, which is here,
yes,
a date and time stamp over on the right, and what it was that was transacted. So in this case, it was 0 ETH, so it was probably smart contract executed or something. We've got better on this next record down, going from 0xe blah 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 blah, where they paid a fee, goes to this address 0x5a, and it was half an ETH, 0.5 ETH. So that's all the Ethereum blockchain does. Gone. So
in this particular transaction, to send half an ETH to someone, the sender paid 1,000 gas.
Correct. Yes. Yeah. Exactly right. So you see that there's not that much info in there.
No. So the sender actually had to send 0.5000 something Ethereum.
Yep.
Only half an Ethereum reached the receiver.
So they sent 0.5 ETH, but the cost of sending that ETH was 0.00278, blah, blah, blah. Yeah. Okay. And so again, the same concept, that we've got a from address and a to address, which are wallet addresses. And if we click on this wallet address, this then takes us to this wallet and shows us every other transaction that wallet has ever done. So you can see that again, if we were able to work out whose wallet that was, we've now got a complete history.
Yeah, we do.
So
we would.
Pretty powerful. So this is why if you link your NFT to your wallet address, then people can see straight away every transaction that you've made, which, as you were saying before, from a security point of view, may not be a great thing.
No. Unless you have this dedicated wallet for your NFT avatar.
Yeah. Correct. So you, as I say, you could either do it that you send the NFT ownership to a distinct wallet, or if you're going to use an avatar somewhere, then use the avatar of the image, not an avatar going via the NFT, which is probably more sensible anyway.
Yeah, it is.
So there you go. So that's why you're right that it can be a security risk, but there is several ways around it to deal with it.
As always.
Exactly. Yeah. So that's it.
Yes. Thank you.
So the next question was what's the Bitcoin price doing?
Let's talk about this.
Let's talk about Bitcoin. Okay. So let me just grab a screen. Okay, so I'm going to share standard screen of Bitcoin versus USDT. This is the daily chart.
Yeah.
So each of these candles is 1 day's worth of trading. So we can see back on 28th of February, a great day because it went up from 37.7 up to 43,000. So it went up $6,000 in a day. And then some more people thought, oh, I'll buy into that. That's really great. And then the smart money sold out and it collapsed. And then it recovered and it collapsed, blah, blah, blah. It's got very exciting around here, where there's some big price shifts. I don't think that's necessarily displaying that correctly. But if we go down to what's going in the last day or so, so we have a look at the 1 hour chart, we can see that it's going down, it's going up, it's going down, it's going up. That's what it does all the time. There's nothing kind of new on that. At the moment, it's settling just under $30,000. Remember, for most people who are watching, crypto people tend to talk in dollars rather than pounds if they're in Britain. That's just the normal way. So we can see it's kind of cycling around a little bit, but it's kind of settling, hovering a little bit around 30,000, just under 30,000 mark. Now, there's some people who are more expert in this space than I am, who are suggesting that at the moment there's an overall downward trend. So we draw a couple of lines just to show kind of like the peaks and the troughs. So what they're saying is that Bitcoin appears to be channeling, it's on the low side at the moment. Nearly had a breakout here earlier on today. So at 10 o'clock this morning, UK time, it went up from 29.5 up to 30. So it gained $500 in an hour, which is getting really exciting. But then it's kind of settled down again. But you notice it didn't go above this resistance line up here, and it hasn't dropped below this resistance line, apart from a little bit here. It hasn't dropped below here. So you can see it's gradually creeping in within these zones. And when it breaks out, that is probably a strong indication that there's going to be a big price movement, either upwards or downwards.
And is there any way to predict which one is more likely, upwards or downwards?
There are many ways. People will talk about using other indicators. They'll use relative strength indicators, moving averages. They'll use a thing called Fibonacci's. They'll use all sorts of indicators, and everyone's got their own favorites as to what they think. But the general consensus on the people I've been listening to today is that they think that Bitcoin is about to drop significantly. And you know, some of the numbers I'm hearing is they think if it goes below 29, then it will drop to 27 and then 21. So they think that there could be a massive drop type thing. And then there are others who, one of the calls who was on today was talking about it going down to 11,000. So if you listen to other, so if you listen to other people, we might be about to go into an absolute mega drop. However, personally, I'm not convinced by that. I think it's all channeling within this area. And I think if it does drop below 29, I think we might well see it retrace down to 27. I don't think it'll go much lower than that. But more interestingly is I think that if it goes above about 30,500, we might see another big spike. And it might be the beginning of another big trend in an upward market. The thing I think might be a big decider on it is that there are a number of US economic indicators being published on, I think it's Wednesday, I think. So this is the Fed making announcements about how trade's doing and all that kind of thing. If those results end up with the stock markets going up, then it seems that Bitcoin's beginning to track quite nicely with some of the things now. So if the stock market goes up, you're likely to see Bitcoin zoom up as well. Likewise, however, if it's all bad news published on Wednesday, then that means stock prices will go down and you could well see Bitcoin dropping quite significantly.
So it a lot depends on the external events as well.
Yes and no. So
it depends on how many people at the same time decide to buy Bitcoin.
Yep.
And which causes the price to go down and vice versa.
Correct. And it might be that they've decided to buy or sell it for a completely unrelated reason to what's in the news. So I see a lot of YouTubers who are saying, hey, well, you can see here, this was when this announcement was made and this led to this price increase. And this announcement was made and this was made to, it's like, no. There's no absolute correlation between a news event being announced and its impact on the crypto price. If there was, it would be really interesting. It'd make it a much more steady market. The market is heavily manipulated. It's manipulated by people who have got lots of Bitcoin or lots of other cryptocurrencies, and they're just playing the market. And they're spooking it, they're spoofing it. So it could actually be that, you know, nothing in the news happens whatsoever, but a crypto whale decides to dump a load of crypto just to knock the market down. You know, and you can't say that that was caused by the news. Equally, you know, we could have an announcement next week of, you know, new president of the USA or something, or that there's they now admit that inflation's actually 30% and not 10%. It could be something that could be truly significant, and the crypto price would just carry on ignoring it. So it doesn't always have an effect. You know, people often say to me, what is it that causes crypto prices to change? And I say, in the most part, it's a butterfly in the Amazon that's flapped its wings. There's some sort of random event type thing. So I think the more general thing, I'm not going to say if it's going to go up or down, but what I am going to say is that I think later on this week something is going to happen, which is going to lead to a big move in some way of a new trend. and that will either be up or down. So I'll be checking on Thursday to see if I was proved correct or not, and see whether the trade's still staying within these two lines.
Mm-hmm.
We shall see.
We shall see.
Do you have any thoughts or opinions?
No, you mentioned earlier, if a crypto whale decide to crush the market and they sell a lot of Bitcoin.
Yep.
If a crypto whale sells all his or her cryptocurrency, they stop being a crypto whale. So does it mean they have only one chance to influence the market?
So it kind of depends on what you mean. There are different definitions of what crypto whale really is, as to, you know, how much cryptos you have to hold in order to be a crypto whale. If we think of, you know, a whale as being someone who's got 100 Bitcoin, so that's quite a substantial amount.
Yeah.
100 Bitcoin in a single transaction would be quite noticeable, but they might trade 20 Bitcoin and try and just nudge things a little way. Or they might do a series of smaller transactions to try and make it look as though the market's going in a certain direction. So we never really know.
Right.
But you're right, if they dumped all the crypto in one go, then it depends what it is they've bought in exchange for the crypto. So it might be that they've sold Bitcoin in return for USDT, which is Tether, which is the US dollar stable coin. Still crypto. So they're still in crypto, it's just that they're not in Bitcoin now. Or it could be that they sell out their Bitcoin and they buy Ethereum. They're still a crypto whale by the definition of having a lot of value in the wallets. It's just that they're now holding different crypto. So they're no longer a Bitcoin whale or an Ethereum whale. Does that make sense?
Yeah, it does.
Yeah. So there we go. So we'll see where the week leads. And it'll be interesting, certainly, to see how things go. The other thing as well, you may remember a couple of weeks ago, I mentioned how it is that...
Sorry.
So you remember we mentioned a couple of weeks ago how it is that each...
Apologies.
Is it saying buy Bitcoin now? It's your alert going off. It's saying buy or sell. Yeah. Okay, so a couple of weeks ago, we talked about how it is that you've got different time series. So for this, we were looking at the 1 day chart. So we just zoom back to the 1 day chart. You can see it's pretty horrific looking downward cycle at the moment on this, which is why people are talking about possibly going down to 25 or even 21. If we look on the 1 hour, that's where we notice it's kind of like channeling within this range. And then if we look within the 15 minutes, again, it's kind of channeling within this zone. So it does look like it's just on its way up at the moment. Let's take a look at the 5 minute chart. Yeah, it looks like it's just retracing a little bit at the moment. So it looks like it might be on its way down. But in an hour or two, it might be worthwhile just checking back. So Bitcoin, as we're talking now, is just on $30,000. So I suspect that might be a psychological thing. If it's just gone through 30, we'll probably see it go up quite significantly, because 30, nice psychological big number. And people might go, oh, it's a great time to get into it now, you know, and we might well see the next few candlesticks go green and go up. And it might well then breach this 30,100 mark quite quickly, which means it might be on its way onto a new upward trend. We'll see.
However, we still need a couple of days to see whether it goes this way or not. You said Thursday.
Yeah. So this is where, again, the other thing to bear in mind is that there are often trends within trends. So if we are a day trader, then we could be happily scalping on these uptrends and these downtrends here, and it doesn't really matter as to whether the prices go up on Wednesday or Thursday or not. They're still making their percentages here. You think about, down here, they went there from 29.7 and got out at 31. So that's $400. So that's 1 point something percent in a single trade. So that some people will happily monitor these transactions and they'll do what's called scalp trading. And scalp trading is where they're just making small bets on smallish movements within a range. And they can clear several percent a day on that basis. And so it doesn't really matter if at the moment they can see things are going up and down a little bit within this range. Because that's where they're making their money. When they then look at what gets announced on Wednesday, or on Thursday, it might be that there's a sudden explosion that if they time it right for, they'll do really well from. But if they judge it the wrong way, they could get very much caught out. So a lot of scalp traders stay away from news events because they stop this kind of like cycle type thing. But everybody's different. So there we've got it straight away from just using a couple of indicators of like drawing a couple of trend lines. We can see what an overall trend is, and that gives some indications. But there are lots and lots of other tools and indicators that people can use. We've got some of them up at the top of the chart here of things like moving averages. And some people swear that when a 200-day moving average crosses a 50-day moving average or a 20-day moving average, that means something big and so on. Other people disagree, each to their own. It's like horoscopes. You
believe it if you want to believe.
Yeah. And for some people, it does work sufficiently. And I keep saying that the reason that technical analysis, which is what we're doing with the charts, the reason that can work for some people is because it is being used to assess the behavior of other traders. So in the stock exchange world, they do exactly the same. They use all the same indicators and they use all the same trades. It's just that it's showing share prices now. In the stock exchange world, people do this for a living because they're actually tracking the value of the stock or the share of the company. And so they can do their own things. In crypto, you're using the same techniques, but you're using the same techniques to predict the behavior of everybody else, as opposed to the value of the stock, because a crypto token has no inherent value. So what you are doing is you are using it simply as a way of saying, the example I gave before of a 200-day moving average crossing a 20-day moving average is a well-known signal in the market. And so if enough people believe that enough other people are going to use that as a signal, then they kind of go, well, most people think that means it's going to go up, so I'll go up. Or what some people do is they are counterintuitive, and they do the opposite. They kind of second guess that, well, if everyone thinks that this means that everyone's going to buy, then actually enough smart people are going to realize that and they're going to sell, and therefore I'll sell, and blah, blah, blah. It's all psychology.
And they profit.
Correct.
But then again, they only profit 50% of times.
Well, the thing is that you don't have to profit even 50% of the time. What you have to do is make sure that your profits make more than your losses.
Yeah.
So this is the kind of bizarre thing that from a beginner's statistics basis, you would think that you need to make a profit more than 50% of the time, but you don't.
Not necessarily.
What you need to do is if you have 10 trades and 7 of them make a loss, but 3 of them make a big enough profit, then you're still ahead.
Yeah.
This is what some people don't get. This is why a couple of weeks ago on one of the Facebook groups, people were getting all doom and gloomy because Bitcoin was going down in price. I think it was already at $33,000, and it was a 25% drop in a week, which is quite significant. But I pointed out that over the last 5 years, Bitcoin has dropped by more than 25% within a week on 5 occasions. So it's not unknown for it to have this sudden drop type thing. But what people are forgetting about is that over that same time period, so over the same 5 years, it has increased by more than 25%, 8 times. And some of the increases it's had were, I don't have the numbers to hand at the moment, but it was in excess of 45%. So if you start doing the maths and work out, well, if it dropped by 25%, but you didn't have any money in it at that point, you're just holding a stable coin or cash or whatever, and you bought into it when it went up 40-odd%, well, you can then afford for it to drop 20-odd% after that. And this is the thing where, you know, all the mainstream media always go in for the, oh, crypto's collapsing, people are losing loads and loads of money, blah, 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 blah. You know, Bitcoin's gone back down to prices not seen since January of last year. It's like, yeah. And if you look back before January of last year, the prices were much, much lower. So anyone who's held crypto for anyone who's held Bitcoin for 2 years or longer is still ahead. And the mainstream media don't like to talk about that because that doesn't make good headlines. Whereas, you know, crypto millionaire loses lots of money makes good headlines. Whereas, you know, crypto investor who has been putting into crypto for 4 years is ahead by 50% despite recent drops doesn't make good news.
No.
Yeah. And that's the way it is sometimes. We've only got a few minutes left.
Yeah.
Amazing, just with the two of us.
To me, that's been the quickest session ever.
But a great opportunity. This is why
Yes.
I enjoy doing one-to-one sometimes, because we can explore something specific for you, so you get value out of it. Yeah. And it means in the recording afterwards, people who are at a more basic level or whatever can actually listen to it and know that it's hopefully at a level that they can understand as well, so they'll get something out of it. So that's good. Do you have any more questions? Because I've got a question for you.
Oh, what is the question, Gary?
So 2 weeks or 3 weeks ago, you were set the challenge of getting a crypto wallet. Have you set one up yet?
No.
Come on.
I absolutely should do it.
Yeah.
I was kind of sidetracked by nothing, by everyday things.
Yep. So that's often the way it happens. So I'll share a story with you in the last few minutes of what happened when I first came into crypto. That myself and a friend met up, and I was already into blockchain and distributed ledgers, and I knew about crypto and that kind of thing. And this was a few years ago. In fact, about 6 years ago, I think it was. And I said to my friend, oh, should we try and buy some Bitcoin? And he went, yeah, that'll be good fun. You know, we'll put in like £100 each or something that if the world came to an end, you'd survive type thing. So we both agreed we'd go and put £100 as it was. So it shows how little we knew because we're talking about pounds, not dollars. But we both agreed, we both go away and we both go and set up a wallet and put in £100. We both went away and then we meet up every week in town. In fact, this is how the crypto club came out. We meet up every week. The next week, I said to him, oh, it was a real pain setting my wallet up and my account. I didn't know what I was doing. It took ages and I had to do these know your customer checks with the bank, and that took several days. And I had to, anyway, I managed to do it, but I got my £100 of crypto. And he said, oh yeah, he said, I was a bit busy. I didn't get a chance. I'll do it next week. Okay. So a bit like someone I'm listening to at the moment.
Yeah.
And then the next week, we met up again. And I said, oh, did you manage to get the what? He said, to be honest, he said, I looked at the fees that they were charging for whichever thing they were going through. And for £100, they were going to charge, I think it was £7 in fees to do the transaction. So I didn't bother with it. So I left it. Okay, well, why don't you do it anyway? You know, okay, I'll do it next week. Week after, comes back and he said, oh, you you know, the price of it's gone up a bit too much now, so I really can't be bothered, whatever. So, what do you mean the price has gone up? Well, when we were both about to buy our £100, I think Bitcoin was round about $900.
Even 100, not even 1,000.
Yeah, it was about $900. And by the time he'd got round to not buying it 3 or 4 weeks later, it was now trading at, I think it was $3,000, possibly more. So because he didn't want to spend £10 on he didn't want to spend £7 on a £10 investment, even though that £100 would have gone up threefold or fourfold, and would have now been sitting on £400, and he hadn't bothered. He'd just put it off. So he'd lost the opportunity of making several £100 for £7. So this is it. So the thing with crypto is it can be so volatile, and this is why I say to people, you know, the best time to buy crypto, if you haven't already, is just buy it as soon as you can. Just a small amount, just enough that you can afford to lose if it all goes dreadfully wrong, because at times it will. You know, and I am honest to people that when I say you can lose all your money, I really do mean you can lose all of it. It just exposes you. It gives you the effort of creating a wallet, registering, all this kind of thing. And then it's great fun, and you're hooked then. It's like drugs. So that was it. So that was, sorry. So my advice to you, my advice to everyone is, if you don't have any crypto yet, just buy a small amount that you can afford to lose. You know, this isn't financial advice, just so you go through experience of creating a wallet, setting up an account, and so on. And then you'll get really interested in crypto. So I'm going to close it off there.
My new next deadline is next week, but by next Sunday.
Yeah, and don't forget crypto. Bitcoin in particular is now at $30,000. So, you know, and I think if it goes above about 30,200 or 30,500, I think that might be a massive breakout, and we might see a sudden spike. If it goes below 29.5, then it might absolutely plummet down. But keep an eye out on Wednesday or Thursday. But this is why I say, you know, go create a wallet, buy some. Don't even buy Bitcoin. Buy something like Bitcoin Cash, so it's something that is cheaper and has got lower fees and that kind of thing. Just to create a wallet, just so you can say, Gary, I've now got a wallet. Okay, well. All right. Till the next week. Until next week. I'll see you next week. And see you next week. And you know what? I do feel like we've only been talking for 15 minutes. It's always good fun speaking with you. Yeah. Thanks to you too. Have a good week. I'll speak to you next week. Speak to you next week. Have a good week. Bye for now. Bye-bye. So I hope for novices in particular, this was an interesting session. If you enjoyed it, do remember, subscribe. We produce these every week. Do click on the like if you enjoyed it. Make comments, ask questions. Even better, come along to a future session. Link to the events are below in the comments section. Meetings are open to novices and experts. Some weeks we get hardly anybody, and so we end up with a personalized one-to-one, as we did today. Other times we may have 10 or more people all sharing their ideas, their news, their knowledge, and that kind of thing. So hope to see you again. Don't forget, do subscribe, do like, because that does make a difference. Channel is growing gradually, but the more we can get to grow, the better. I love building communities in the crypto space. So I hope to see you at a future session. Bye for now.